Crypto Hotep here with another trading video. This video is going to be talking about the crypto markets and my thoughts about what's going on. We're also going to cover a few bullish topics that have just occurred, as well as we'll try to look at that spot altcoin portfolio and get an update for you and just kind of give you my thoughts about where I think the market is heading. Before we do, though, as always, guys, this is not financial advice. Please do your own due diligence when investing into crypto, stocks, gold, silver, whatever. Consult a professional, and this is not financial advice at all. And also, shout outs to the good folks at Coinbase, as they've always sponsored these videos. I've used Coinbase. You guys probably know my story. I've used Coinbase for over 5 years. I think they're the GOAT crypto exchange. And if you want to support the channel, support me, go to the description, go to the link in the description, and that's where you can basically link the account with that Coinbase link, and I'll be paid certain transaction fees that they charge you guys for trading crypto. So I get a percentage of that if you use that link. If you don't have a Coinbase link, feel free to use that link as well. With that being said, guys, we can jump in. Just an overall crazy weekend here. So two things. So as of right now, it looks like that we may have reached a deal for the US government to reopen. So, I'm on one of my favorite accounts, and Twitter, the Kobesi letter, who tweeted a short-term funding bill is now expected to receive enough support to reopen the US government through January 31st. That's bullish. That's good. That means things are starting to get back to where they once were. In addition to that, they also tweeted Republicans and enough Senate Democrats, so not everyone, have reportedly reached a deal to end the US government shutdown after 40 days. Okay. And then the second thing is stimmies. The stimulus checks are back. So President Trump just announced a tariff dividend, a payment of at least $2,000 per American. We expect 85% of U.S. adults to receive this, resulting in $400+ billion being handed out. Last time we did these stimmy checks, we were in 2020, and it ironically was Trump then again who passed out stimmy checks, and we all know what happened when that happened. So a lot of liquidity got into the market because of those stimmy checks, and crypto went bananas. So again, history doesn't repeat itself, but it does rhyme. So we'll see what's going on here. So let's go to the charts here, and we're going to hop in first with Bitcoin dominance chart. So the Bitcoin dominance chart, and again, guys, before we look at the charts, if you're unfamiliar with how I chart, what candlesticks I'm using and all that, go to the channel and go to the video that I believe has over 1,500 views. It's called My Strategy. It's video number 1 in My Strategy series. And that goes over my use of Heikin Ashi, supply and demand, liquidity, how I enter trades, exit trades, so forth and so on. A lot of YouTube, the algorithm was algorithming that video because that video caught fire, and it's just increasing views, it seems, every month. It's crazy because that video had 1,200 views, I think, in October, and now it has over 1,500. So it's pretty amazing. Thank you again for supporting. But with that being said, guys, so these are Heikin Ashi bars or Heikin Ashi candlesticks. That's why the price action looks a little bit different. And if you're unfamiliar about Heikin Ashi, they're right here if you're using TradingView. Okay, so if we look at Bitcoin dominance chart, the Bitcoin dominance chart has been rejected at the 60% mark for 1, 2, 3, 4, and now the 5th week currently. It has been rejected at that psychological level of 60%. Ironically, 60% is falling up under the 50 RSI too, and it's also falling up under the 50-week moving average. This is what we want to see. If you are a altcoin bag holder, you want to see the constant rejection of Bitcoin dominance, and you want that to be sent down. Why is that? Because if Bitcoin dominance is going down, that means your altcoin dominance is going up. It's always a direct opposite occurrence that happens. So the next chart we'll look at is USDC dominance. And normally I can predict things pretty good off the USDC dominance chart, but these past weeks have been a little bit odd here. So USDC dominance, unfortunately, has passed, I should say, the 50 moving average, 50-week moving average, and also the 200-week moving average. Okay, so right here and right here, both of these, it has crossed above it. That's something you don't want to see. When that happens, that means that things are looking bullish for stablecoins. You don't want things to look bullish for stablecoins because that means people are taking profits and holding them in stablecoins instead of putting the money back into altcoins. However, and not however, but also we have the potential of a golden cross here. That is usually when the 50 and the 200 EMA cross to the upside. You can see that, and I'll zoom in right here. Right there. We do not want that. We do not want that at all. That is not something good. But I will say this, there is one thing that is giving me a little hope, and that's these long wicks. So these long wicks here, 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 and even here. So that shows rejection. Long wicks in Heikin Ashi means that the resistance or the support is showing rejection to that level. So there is some rejection here. I haven't marked it because I haven't seen any red candles as of yet, but there's some sort of rejection right here in this area that USDC is not liking. So that's giving me a little hope as to essentially hopefully push this down, but we still have weekly demand for the dominance here and weekly demand here. Okay. USDT looks a little bit better, and I like USDT chart a little bit better for all coins. Why? Because even though USDT has shown bullish action, just like USDC, it hasn't really cleared that weekly level yet. It hasn't. So it has broke above your 200-week moving average, but it hasn't closed successfully above the mitigated area. And for my ruling is to close above the mitigated area, the candlestick has to close above it and then trade 2 to 3 candlesticks above that without touching it. And unfortunately, it's still touching it right here. So again, I'm still confident, and also showing those long wicks at this level as well. Okay. So let's look at the dollar. Dollar makes me feel better. So the dollar here rejected 100. So that is a very psychological level for the dollar right here. And it has rejected it once here in July, and then this last time last week. So it rejected it right here. It got up to it, and then not only did it reject the weekly mitigated area of 100, but also the 50-week moving average, this purple line right here. So that's what we like to see. We want to push this back down right here. I wouldn't even mind if we push it down in this weekly area. I really wanted to get back into the 95s. That would be good, but I'm all in all, I'm fine with it rejecting last week, and then this week it's lower, trading lower. So we should be good for things, for risk on assets like stocks, gold, crypto, and such. Okay. And then let's go to our totals chart. So one thing that I did notice, and I changed my total chart setup. So instead of just doing totals, I am charting totals ES. So total 1 ES, 2 ES, and 3 ES. The difference is it is the crypto total market cap excluding Bitcoin, Ethereum, and stable coins. That was the key thing. So rejecting the stable coin gives a better, clear picture of the markets, I feel. So this is total 3. Okay. So it looks very similar to the past total 3. It's just without that stable coin piece in there. But if you look here, we have a rejection from this weekly mitigated area around 850, right? 850 billion of the crypto altcoin market cap. So price has come down into our fib golden zone between 50 and 61.8%. And what I feel is though we can stabilize price here for a bounce up. Why is that? Well, we've wicked into this weekly mitigated area at around 550, and then we've brought in price back up. And now we've wicked down too as well, and we've broadened price back up. So I'm hoping we can see these rejection areas right here for a reversal, just like we saw the rejection areas for the stable coins. So that's what I'm thinking for our altcoins. That's what we want to see. Let's go to Bitcoin. Bitcoin's chart looks actually fantastic to me. Despite Twitter and the doom and gloom and everything that was going on this past week, to me, we look good. And why do we look good? Well, I'm going to show you 1 second here. Okay. So with Bitcoin, we have our weekly mitigated area of 100K. That is a great psychological level that needs to hold. We need to hold that level. When Bitcoin starts trading below that, completely, again, completely, because there's going to be some people in the comments that say, well, Crypto Hotep, it did trade below it. We traded around 97, 98K. Well, no, for a couple reasons. We're on the weekly chart. That's one. And then my ruling means that the candle itself, so the candle wick and body, needs to trade below that weekly mitigated area, 2 to 3 candles. Okay. But if it just wicks it and comes back up, that doesn't count. It just means that it's been tapped into. That's all that means. If it holds, fantastic. And that's what I'm hoping that Bitcoin does. We need that 100K to hold, which it is holding right now. Okay. So that looks fine. I also brought in a weekly supply or resistance area at around 120 and 119, between 119 and 120 right here. So something to keep in mind. This area has rejected Bitcoin once and twice right here. So something to keep in mind here. Okay. But all in all, I think we still look good. We still look good right now. Until we start trading in this area, now I'll get worried. But if we're trading above here, I'm good. I am good all day with Bitcoin. Let's go to Ethereum. So Ethereum looks a little bit more scary than Bitcoin, but still good. So again, rejection at 40, between 46, 4700, came down. We've wicked our golden fib zone right here, right? And now price has brought back in. Now, this is a key example of the candle itself wicked into the bottom. It started trading below, but before the weekly close, price came back into here. So the body is still in the weekly mitigated zone area. So technically, based on my rules, Ethereum hasn't broken that 37, 3800 level yet. Okay. So that's what I'm hoping we at least hold this here. If price just keeps kind of dinkering around here in this level, I'm not worried. It's when it starts declining further down. Now, if it just like stays like this in a straight horizontal line, I'm not worried about that. So as of right now, I know it sounds weird, but Ethereum looks okay to me. Okay. And let's go into our trades. So the trades that we are currently in, we did some buying too. So Aerodrome, we're in right now. We bought Aerodrome actually at the start of this candle, so start of this week. Why? Because the previous week, and you guys can't see that well, but this candle right here, this doji, um, it produced a green doji the week this past week. It produced a green doji. So based on our rules, that means we could buy it. Okay. And also price was in a weekly mitigated area for one. It showed bullish volume right here. And then we were a little bit above the 50 RSI. Again, this is all up to perception here. So if the RSI were higher on this, I probably wouldn't have pulled the trigger, but I think we have some ways to go with Aerodrome, so I'm good with that. Okay, let's go to C. So C, couple things I want to see, no pun intended, out of C. So we are below the 50 RSI. We had bullish, or not, I shouldn't say bullish, but we had a lot of selling. We had a lot of bearish selling here, but it held into the weekly mitigated area of around 14 to 15 cents. So now price is brought back up. Does it look good? It sure does, but we're not just going to blindly buy. We want to wait to see buyers step in here. So if this candlestick turns green, we're going to wait till the weekly close, and then we might buy some C. Okay. Uniswap. Uniswap looks fantastic to me, and this is a prime example of what we want to see out of C. So again, bearish selling, right? So you have a downtrend, bearish selling, all the way to this bottoming level of, let's call it $6 or so. So around $6 here, and now boom, we see a green candlestick. Does that mean we buy that green candlestick right now? No, it doesn't. We still wait. Again, this is part of my trading strategy. So we wait. We have about 7 days left in this candle. So we're going to wait, and we're going to make sure that bullish pressure that we're seeing right now that's producing that green candle is legit. Okay. And let's go to Graph. Graph has been a very stubborn coin here. So we've had some bearish selling pressure. No life has seen the light of day for Graph right now, except now. So it's gone into this weekly demand area. Again, weekly demand area here. Here we'll kind of zoom in. Weekly demand area here, we're showing some life. We got some, even though it's a doji, it's a bearish doji, but we're seeing some buyers step in. So we see a little bit candle here. Does that mean we buy this little bitty candle? Nope. I want to see more bullish buying pressure out of this level. So we're going to wait. Now, if we wait and this closes this week, I might buy some Graph, but I'm going to wait till Sunday for that. Okay. And last but not least, near. So near was in the accumulation box, this blue box here. This accumulation box was in a weekly mitigated area that hit our box. It's also below 50 RSI. That's a great buying sign for me. And then last but not least, look at that bullish volume right here for near. That's the biggest candle for near that I have seen ever. Look at the rest of the candles. It's nothing. You can see that buyers have really bought into near at this level. They find this level very valuable, and that's why we wait and we only buy when other buyers are buying. And then last but not least, guys, let's go to our portfolio. So our portfolio, our crypto spot portfolio, where all our trades are taken on Coinbase, has a monthly rate of return of 20.25, 3 month of a negative 10.22, and then a 6 month of a positive 68.48. So you can see here that Aerodrome is basically the biggest, our biggest profited trade. We are still in these trades, but as of right now, we're up 44% on them. With near, we're up over 6% on near. Currently, USDC, we do have some dry powder in there to buy these dips. And then you can see Uniswap C, and then it's like our just laggard right here, graphed down negative 28.19% here. And that's about it, guys. So we'll kind of close this video out here. Again, if you appreciate the video, feel free to like, subscribe, comment, let me know what you think. And as always, thank you and happy trading, guys.